Hey traders, Raghee here, and in this recap video I'm going to cover a way to enter non-trending markets, and a perfect example is actually a pair of metals contracts, silver and copper. So first of all, how do you recognize a non-trending market, and why would you even want to trade one? I mean, we hear all the time trends are our friends, so why would I want to trade a non-trending market? Well, they do have their advantages. I mean, you talk about oscillating markets, or you talk about channels and overbought and oversold levels. I mean, that's all terminology that would apply to a non-trending market. And while they're not my favorite type of market, there really are four types of market trends. This goes right back to a guy named Charles Dow. Yep, that Dow. And Charles Dow talked about four market trends. And the four that he talked about really include two sideways market trends and two trending market trends. So you have accumulation, you have something called distribution. Now the difference between the two is the volatility. Accumulation is probably more commonly known as consolidation, right? Consolidation, narrow sideways markets, while distribution is something more akin to wide, choppy ranges. You know, when people say the market's chop, it's slop, it's usually a wide sideways range. But then you have two trends, and that's really easy. It's uptrend and downtrend, and Dow referred to these as markup and mark down. Now, a lot of people refuse to kind of recognize that there are four trends. I think a lot of traders, not all, but too many, basically say, well, we've got uptrends, we've got downtrends. And if I don't have a market heading to higher highs, then I'm looking to treat it like a market that's going to make lower lows. But in this transition is oftentimes one of these two markets. And so it's not the only time these two markets will show up, but there is a reality where we need to change our tools, change our rules, change our strategy and tactics, and say, look, I'm not trading the kind of organization that's required for an up or down trend. Now we have the market at sort of the disposal of whoever is going to be running the show for maybe a session or two. Okay, so having said that, how do I recognize this with my tools? See this right here? Green, red, blue, green, red, and then see the sideways wave? It's kind of more moving this way. I have a mix of all the colors. There's no one dominant color, green or red, that's ruling the price action. So that tells me neither the bulls, right? So the green is the bulls. Neither the bulls nor the bears kind of have control of the market. And when that's the case, the result is chop. The result is no trend. Well, there's power in that, because now I can go about recognizing where the inflection points are in the market. In other words, we could see where previous lows have left behind either a Darvas level or just wicks, and we can see where these Darvas levels and wicks have created a zone. And this would be, to me, oversold. It's an oversold zone. Up here, Darvas, wicks. This would be overbought. Now, I would not use that terminology in the context of a trend, only non-trending markets. And so in this area in here, all this, I would recommend using a 60-minute time frame or less. Stay nimble, because anybody could rule this middle ground in here. It's a mess. But once we get to the edge of the market, we have our edge. At the edge, we have an advantage. In other words, once we reach the range extremes, and right now, we're reaching a range extreme in silver, and we're looking to build a long position. Now, this will be the third time that we've done this, actually the fourth, that we've taken advantage of this kind of move. It'll be the first time on this September contract, but silver has been pretty predictable in this area. And then it also does what? Well, look how predictable it's been up here. Gets this level and boom, down it goes. So it's kind of interesting that this chop has been really fairly user-friendly. What about copper? You can see the same levels on copper. Same thing happening here. So if you use oscillators like a slow stochastic or the simpler trading ready aim fire, those are the kind of tools that are perfectly, to me, going to reflect when we're reaching a level at which the buyers will come in, will reach support, and possibly bounce. So keep these two markets on your radar. They're two that I'm looking for buys on.